A blowout jobs report and the return of Roaring Kitty. I'm Lisa Bernhard with Reuters, and here to talk about both is Alexander Morris. He is CEO of FM Investments. Alex, let's start with today's blowout jobs report. Far more jobs created in May than economists had expected. 272,000. Economists polled by Reuters forecast 185,000. But the unemployment rate ticked up to 4% from 3.9% in April. What do you make of those divergent numbers?
Well, Lisa, thanks for having me. It's a really interesting day that we talk about Jerome Powell and Roaring Kitty in the same sentence. But I think that the headline number there were some jobs created in some unexpected places, and in more jobs than many created or than had been expected. That isn't to be a terrible shock. The forecasts were speculation that just kind of got away from themselves. It's still a strong economy. To anyone who's been trying to hire someone, this was not a surprise to you. To anyone who picks up their phone and finds 16 unsolicited job offers for all sorts of places, that's the top tick. You shouldn't have been too surprised. The key here, though, is very much the unemployment number. This is actually the Fed's mandate. Job openings and where they happen isn't their mandate at all. That's a byproduct of the other thing they try to manage, which is inflation. But here, they were looking for that number to tick up. That is an indicator that things are working. Same is with the wage inflation. Still 0.4 of a basis point. Sticky. Wage inflation is a sticky thing. People don't like pay cuts. They look at that worse than being laid off. So as a result, the Fed now sees a couple of indicators of, all right, now it's time to really start changing the inflation story a little bit. That could lead to inflation. They want to fight that. So maybe that keeps rates off the table in September. We've always thought the first rate cut was in December anyway. We still see that being on the table, if for narrative reasons only. But the table is now set that if you were hoping for July, I think even everyone has capitulated on that. If you were hoping for September, those bets on the Fed funds futures are going to come way down over the weekend on Monday. December is our best target, and the numbers are lining up for it.
Okay, in other news, we're going to talk about the original meme stock GameStop, and we saw the return of Roaring Kitty Keith Gill. He was the retail investor who started the whole retail trading frenzy back in 2021. Okay, so he made his return today, first time since then on YouTube with a live stream. It was, a little nutty, I think it's fair to say at times, but he did mention that he's banking on Ryan Cohen, the activist investor, who has pretty much taken over at GameStop, and the pile of cash that they're building there to turn this company around. What do you make of that? What do you make of his theory about Ryan Cohen and if this company has a future?
Yeah, if you've watched any of Roaring Kitty, and I tuned in today, me and 603,000 other people tuned in to see what he had to say. It is a little nutty, but cutting through, his message was pretty simple. Ryan Cohen, who was founder of Chewy.com, CEO, tech investor, made money in his personal life, made money in his investing life. As they put it, as Keith put it very well, the market's betting on the fact he's a doofus. All you have to bet on his fact is he's not. And I think there's a lot going for that argument. The GameStop as a firm may not have a business model we want to get behind, but it has a charismatic leader. It has a lot of cash. It has an installed legacy base that can at least see it through times of stress. And put together, it has a loyal following that if you were short GameStop a few years ago, you felt the pinch of that. So it has developed the one thing every investor relations committee wants to create, a very diligent following who will buy the stock no matter what. And those folks showed up today in force.
The stock did plummet while he was talking, and trading was halted more than once. Why did they halt trading?
So the exchanges have circuit breakers to try to prevent free fall or melt up in stocks. So today what we saw was the limit up, limit down, which is too many disparate orders with prices so far off what the fair market price is, flooding the market. And the exchange, as a general rule, doesn't want there to be an unknown price. So things are coming too far up, too far down. They just hit a 5-minute break. And we saw 3 or 4 of those happen today in the name. That said, coming into the first one, there were still 150 million shares that had traded and another 100 million that would trade between now and the close. So clearly there was a lot of volume. The name, by the way, had come up an awful lot. If you look at the tracing over the last 2 weeks, it's been on a roller coaster ride of 200, 300% gains. So although it plummeted during that call, during the live stream, I don't know what folks expected to hear. Gill doesn't have any inside information to the best of my knowledge. He came up with a thesis consistent with what he had espoused during COVID, and more or less we got what we should expect. He's still up a great deal on his position. He showed his position during the broadcast, and I think he'll be just fine with his $30 million in cash in that account, even if something doesn't go quite as he might expect.